Hello, my name is Andrew Petwain. I am the managing editor of InsuranceInvestor.com, and it is my pleasure today to be joined by Guillermo Donadini, former Chief Investment Officer at AIG and independent trustee and advisor. Guillermo, how are you?
How are you, Andrew? Thank you for having me.
Not a
Really
problem.
nice
It's
to,
lovely to
to
have you.
talk about markets. Thank you.
Lovely to have you. Lovely to have you. Well, Guillermo will be moderating the opening panel discussion at our Insurance Investor Live event here in London in September. He'll be doing a panel discussion on geopolitics, the election year, national debt, macro views, and what it will impact on portfolios will be, as well as from a tactical and strategic perspective. So it's a big, big topic with lots to discuss. So Guillermo, I'm going to dive straight into the questions I have for you. And one of them is going to be about this election year that we're having. So in 2024, what have the various elections we've seen this year and are still waiting for, except for the US, which we'll speak about in a while, what have they brought to the market, especially the UK and France, the European markets, and India in the emerging markets?
Well, I think that we need to separate between what are emerging markets and developed markets, right? Definitely, if you see the market performance during the year, in developed markets like UK, France, others, definitely the performance was explained more than economic news than from geopolitical or political or, election results news. What we see is definitely this polarization of between the extreme right and the left, and that will generate volatility in the future. But this is something that is going to be more longer term. I don't see this affecting in the developed markets now, right? And during this year, in terms of emerging markets, definitely elections affect more the markets than in developed markets, and this is because definitely, the propension of these governments to make big changes in rules, in regulation, in laws is much bigger. That's why after the Mexican election or the Indian election, we see actually the markets actually, making quite a loss in the Mexican case and quite a big gain on the Indian case. But again, it's I think we have to separate that. But at the end of the day, I feel like central banks today have much more power of inflicting investment returns than the elections result. That's the way I see it. And at the end of the day, governments, particularly in the developed markets, have very little degrees of freedoms to do major changes. That's why also I feel like the markets are not going to expect major changes coming in the near future.
That's a very interesting point. And I want to build on that with my next question. So let's turn more to the US, which is obviously one of the last big elections of this year. So we could see some changes depending on who gets the White House at the election. What are your thoughts on this, taking into consideration what you've just been saying around developed markets and the sort of more narrow case they have for changing things?
Yeah, so in the case of the US political scenario, for me, my focus is more on the structural changes that we can see in the medium to long term. I'm afraid about this polarization I mentioned before, and you can see it in what the two candidates are basically talking about, which are increasing uncertainty about the future regulation and the impact of economic activity. But I think that the other thing is I'm more concerned about exactly understanding what's going on in the American society that is basically puts the political scenario under these two gentlemen, which I feel like nobody is really very happy having those two choices, right? So I think it's more about understanding what's going on in the society than anything else. And this is, of course, it's not going to impact the short term. It's more, again, medium to long term. I'm not really worried about the short term because at the end of the day, they don't have too many degrees of freedoms. At the end of the day, both will found the government with very high debt, very high fiscal deficit, and very, very low room to maneuver. So at the end of the day, for me, it's more about that than the candidates itself in terms of the next couple of years.
That's an interesting point. And staying in the US, let's look more at the economy. So, can you tell us what you're seeing about US national debt and its effect on portfolios? Is this an issue that you see progressing into the next few years and over the next course of the administration that we voted in?
Yeah, absolutely. So definitely that's for me is one of the key points. So current fiscal deficit, current economic growth, and current real interest rate levels are not sustainable for US government debt. If you make the progression goes to the right, okay, skyrocketing numbers. And today the already the debt is at historical very high level. So I don't see governments cutting expenses. So maybe they will be increasing taxes, but that will affect economic growth negatively, which makes current real interest rates unsustainable. So I see for the future more financial repression as the government needs to dilute their current levels of debt. I see inflation more volatile in the future. So on average, we are going to have a higher level than what we saw during the last decade, but volatile. So basically, in terms of which is going to make realize real rates much lower. So the question is, okay, how we can protect our portfolios from that scenario? And I think what we need to do is to focus more on inflation index bonds, and maybe having more allocation to equity on a strategic basis if you can afford volatility, and of course, depending the investor target returns.
Thank you very much. That's a really interesting point. And my next question is sort of a more global outlook. So let's go wider and look at the general macroeconomic outlook. What are we, where, and what are we focusing on from a strategic perspective?
Yeah, I think it's this phenomenon that we have just talked in the US is similar in the UK, is similar in Europe. So the world economy is under the same situation. So I see that from a strategic perspective, what we think we need to do with investment portfolios is to increase sources for risk premia to basically offset the potential, which I see is going to be a very low real interest rate environment. And basically, there are two ways of doing that. One is through illiquidity risk. So increasing illiquidity risk, going more into private credit and private equity. Maybe on a technical side, private equity might not be a good moment, but on the strategic side, definitely I think it's going into privates in general makes sense. And also increasing complexity risk on our portfolios, which is basically through structure notes, structured credit, where we can add some layers of spread on premia over what is the typical asset class, which is high grade fixed income. So that's the way I think, from a strategic perspective, we should approach the coming 5 to 10 years.
And finally, my last question for you, Guillermo, is taking all of this into consideration, what are you looking at from a tactical perspective heading into 2025?
Well, it's very hard to do tactical, right? So I gave up on that many years ago. But my only concern today is I see quite an overvaluation in the equity market, particularly in the US equity market. So definitely, I would try to stay away from that, at least until we see a correction. But again, I feel it's going to be really, really hard to play the tactical game, because we are going to see a lot of uncertainty, volatility, and everything can basically affect the market moves. So I feel like it's much better to focus on the strategic side, given that if we have to pay liquidity risk, that takes time, commitment to the asset class. So playing the tactical game, given what our challenges are on the strategic side, it doesn't make I don't feel it's going to add any value. That's my view.
An interesting view it is. So thank you very much for your time today, Guillermo. If that has whetted your appetite, then please do follow the links to insuranceinvestor.com and register for the event. And as I mentioned, Guillermo will be moderating the opening panel discussion at the event on this very topic. So we've got some fascinating speakers lined up to join him on stage. And I once again thank you for your time. Thank you for watching. My name is Andrew Twain, and have a lovely day.
Thank you, Andrew. Thank you for having me.